Hello all, Abhila this side. So in this session, I'm going to cover merchant banking services, which is fee-based financial services available in India. So with the merchant banking services, we have to cover corporate restructuring, then stockbroking of Unit 4, and the later in the next session we will start the Unit 5, that is fee-based financial services. Okay, so let's start with the merchant banking services. So merchant banking, there is no universal definition for merchant banking. It assumes diverse functions in different countries. Merchant banking may be defined as an institution which covers a wide range of activities such as underwriting of shares, port- portfolio management, project counseling, insurance, and they rendered all these services for a fee. So they are charging a fee against the underwriting of shares, portfolio management for project counseling and insurance. Origin: the term merchant banking oriented from the London who started financing foreign trade through acceptance of bills. Later, they helped government of underdeveloped countries to raise long-term funds. Later, these merchants formed an association which is now called Merchant Banking and Securities House Association. Merchant banking services, the project counseling, loan syndication, issue management, they are offering this type of services. They're offering merchant banking. Under the merchant banking fee-based financial services, we have a project counseling, loans syndication, issue management, underwriting of public issue managers, consultants or advisors to the issue, portfolio management, NRI investment, advisory services relating to the merger and takeover, and offshore finance. So let's discuss all these services one by one. First starts we will start with the project counseling. So it includes project counseling. It includes preparation of project reports, uh, deciding upon the financing pattern, appraising the project relating to its original technical, commercial, and financial viability. It includes filling up of application forms for obtaining funds from financial institutions. Next, loan syndication. Assistance is rendered to raise loans for projects after determining promoters' contribution. These loans can be obtained from a single institution or a consortium. Issue management. Management of issue involves marketing of corporate securities, that is equity shares, preference shares, debentures of offering them to public. Pre-issue activities, we have a pre-issue and post-issue activities. Pre-issue activities, they prepare copies of prospectus and send it to SEBI and then file them, prepare them to register of companies. They conduct meetings with the company representative and advertising agencies to decide upon the date of opening issue, closing issue, launching publicity campaign. They help the companies in fixing up prices for their issues. Pro issue activities, it includes collecting of application form, screening of applications, deciding allotment procedures, mailing of allotment letters, share certificates, and refund orders. Underwriting of public issues. Underwriting is an insurance to the company which makes public issues. Raising of external resources is easy for the issue backed by well-known underwriters. So underwriter services are provided by some large finance institutions such as merchant banks, insurance companies as well, where they guarantees payment in case of damage or financial loss and accept the financial risks for liability arising from such guarantees. Managers, consultants, or advisors to the issues. SEBI instead that all issues should be managed by at least one authorized merchant banker, but not more than two. For an issue of 100 crores, up to a maximum of 4 merchant banks shall be appointed. They help in listing of shares in stock exchange and completing of formalities under Companies Act. Portfolio management. Portfolio management service is the service which offered under the broking firm as well. So we have this service to discuss under the merchant banking. So portfolio refers to investment in different kinds of securities such as shares, debenture issued by different companies. It is combination of asset but a carefully blended asset combination. So this is fee based service. Portfolio management refers to maintaining proper combination of securities in a manner that they give maximum return. Investors are interested in safety, liquidity, and profitability of his investment, but they can't choose the appropriate securities. So, merchant bankers help their investors in choosing the shares and they conduct regulated market and economic surveys. So, portfolio management services is a PMS in short words, you can say, is a facility offered by a portfolio manager with the intent to achieve the required rate of return within the desired level of risk. An investment portfolio can be a mix of stocks, fixed income, commodities, real estate, other structured products, and the cash. PMS is a customized service offered to HNI high net worth individuals clients. This service is tailored as per the investor's return requirements and the ability and willingness to assume the risk. NRI investment. One more service which is offered by the merchant banking and, with the fee-based financial services. NRI investment has to follow lot of complicated rules. NRI has to follow lots of complicated rules for investing in shares in India. Merchant bankers help them in choosing the shares, offer expert advice, fulfilling government regulation, thus mobilizing more resources for corporate sector. So India has received a largest international remittance that shows a deep connection with NRIs with their roots. Also their preference as investors for India. Advisory services relating to the merger and takeover. Merger is a combination of two or more companies into a single company where one service and other losses its existence. Takeover is the purchase by one company acquiring controlling interest in the share capital by of another company. Merchant banker act as a middleman between offerer and offeree, negotiates mode of payments and get approval from government. Offshore finance. Merchant bankers help their clients in long-term foreign currency loan, joint venture abroad, financing export and imports and foreign collaboration arrangements. So offshore refers to any business activity that take places outside an entity home base. The term may be used to describe foreign banks, corporation, investment deposits. A company may legitimately move offshore for the purpose of tax avoidance or they enjoy relaxed regulation. Offshore financial institutions. can also be used for illicit purpose such as money laundering and tax evasions. Increase pressure in lending to more reporting for of foreign accounts to international tax authorities. The level of regulatory standards and transparency of merchant bankers differs widely among offshore financing, but they generally offer favorable tax laws, which is why they are commonly referred to as tax havens, reduced risks and greater growth potential, significant cost saving for businesses, protection of assets, especially during times of instability, loose regulations, and competition. So we are done with the offshore financing with the merchant banking. In the next session, we will discuss the corporate structuring. Thank you. Best wishes.